first trade we took was on EURUSD. Now this was based on the RIMC model. This is what I saw. I saw a strong move to the downside. I saw a range here. I saw a breakout to the direction of the initial move, and then I saw a possible pullback into the mitigations of the range. Now, this is not an educational video. This is a market recap video, so I don't want to get so much into what the model is about. It's just about having a strong move, a range, a breakout to the direction of the initial move, a pullback into the range, and then a possible continuation to the downside. So that is what EURUSD was about. Strong move, range, breakout to the direction of the move, and a pullback. Now I was looking at entering the trade from this. Also, I had two entries in mind, this other block here and this empty wick here. So I had to take my entries on those two trades there, on those two entries. So price made a move into and activated both entries initially, here and here. Almost hit the stop loss of the second entry, but it didn't, or the first entry, but it didn't. And then came back to break this low here. Now I saw an opportunity for another entry, a pullback into this fair value gap here. So I took another entry there, and then price came all the way to hit our take profit nicely. So it was based purely on the RIMC model. A strong move, a range, breakout to the direction of the move, pull back into the mitigation, and then a sell to the continuation. So I had 3 entries all activating, and then 3 beautiful take profit. So let's go to our next trade. So our next trade was on gold. So gold had been buying for a long time, so I was looking for opportunities to sell. So I saw this beautiful break of structure here, pull back into this structural break, and then made another lower low. So another pullback into this beautiful supply zone here. I was expecting price to make another low, take this old low, make another low, and possibly test this lows here. So I was looking out for entry models, and then I saw this one. I said this is the original reaction from the 5 minutes where I saw the trade. So I was looking out for price tapping this other block here, or going to the original reaction zone here, original supply zone here. So I had 2 entries on this one as well. So price tapped the zone nicely, and then made a lower low, broke these lows here, came down, and I saw price pulling back again. I was expecting price to still make the low, so I added another entry from these zones here, as you can see, and then price almost took us out. It was very, very close. Took us out of the last trade, the last entry I added, but it was still protected. Stop loss was safe, and then price. So we had 2 entries here. The first entry, initial entry, pull back, and the second entry, and then all the way to take profit. So that was on gold. So our last trade was on USDCAD. So we saw price from this point, it was making lower lows and lower highs, lower lows. So it was a very sort of flow up until the point where price broke this high here, and then pull back into this sensitive zone here. So taking out for price making a new high to continue the bullish order flow. Once the bearish order flow was distorted here, there was a break of market structure, a pullback into the zone. I was expecting price to make at least a new low. So I had to refine my initial 1 hour time frame to a 1 minute time frame. So I had these 2 entries. Price tapped into this sensitive zone here and then broke the high. Expecting price to move back, pull back into these 2 entries here, 1 other block here, and then 1 empty wick here. So I had 2 entries on this one as well. So price tapped the entry nicely. It was almost like a sniper entry, and then it was a sniper exit. Price took us right to our take profit and then reversed again. So it was pretty much a sniper entry and a sniper exit for USDCAD. So this is how we took all the 3 trades, all the